To get started, I want to recap our monthly leading economic indicators. We go over these every month. They're represented by green, yellow, and red dials. The green means the indicator is moving in a positive trend. If it's yellow, it's neither positive nor negative, kind of neutral right now, and red means it's a negative trend. As you can see on the left side of the chart, in September, we're seeing some improvement on the top line in monetary policy. We're going to be talking a little bit more about the first rate cut we've had from the Fed in a while. Also, we're seeing some improvement in the yield curve. Both of those boxes are highlighted. Again, the yield curve is still yellow, but it's getting pretty close to a normal yield curve. And what a yield curve is that when longer term interest rates are paying a higher rate of return than a shorter term rate, that's a normal yield curve. You would expect to get a better rate of return, higher rate of return for a longer term bond than you would a short term bond. And that wasn't the case over the last couple of years because of the amount of increases in the Fed rates due to inflation, so on and so forth. But we're seeing a lot of normalizing coming back into the schedule. And when you look at August on the right side of the chart, you can see how where we were a month ago, we're starting to see a little bit more improvement, even though the economy is still slowing. We think we're coming towards a bottom here. We don't believe there's any kind of recession in sight. Everything is looking good to shape up for maybe about a 1.5% growth rate in the GDP for this year. So overall, economically, we think things look pretty sound right now.